All right, we got the global macro market update here, or global macro update. Gonna wait a few more moments just so there are some people on TikTok as well as Discord who do want to come into this live stream. So we'll wait a few more moments and then we'll jump into the technicals here, looking at a bunch of different asset classes, trying to understand the global investor sentiment really. So first thing we're going to be looking at is the S&P and other US indexes, and then we're going to jump into global indexes, but we'll get into that in a little bit later in the video. A lot of movement within the metals for sure. Gold actually spiked from our last video, which is awesome. We were talking about this previous key level of resistance at around 1815. Previous key level of resistance turned to new level of support, and then we had an absolute blast off. Silver even made it more than our anticipated target. So we're out on that. We didn't capture the entire move, but hey, that is how it goes sometimes. Can't catch the exact bottom to top, but we were pretty damn close to the bottom in my opinion. $18 and around 5 cents is pretty damn good for an entry. All right, so we'll look at some TikTok questions before we actually start the global macro update. We got FU Frumza said thoughts on SNCA and DKNG. I don't know what N or SNCA, but I know DraftKings. I think that's DraftKings. Let's look here. Yeah, so that'd be DraftKings. To be completely honest, I don't know much about those two ticker symbols or equities or anything along to do with the fundamentals of those two companies. So I'm basically in crypto, metals, and FX. So I don't really play my hand at any equities. I'll trade indexes. I'll trade like the Nasdaq futures. I'll trade the S&P, but I don't really look at single equities. So I don't really have much of a opinion for you on that. Uranium. All right, so that's something that's a little bit more interesting. Well, due to the metals just being extremely bullish, I do think that things like uranium, palladium, platinum will be appreciating as well. And you got to consider it's not just the metal that can appreciate, but it's what you're comparing that metal to can depreciate. So if you're looking just at the US dollar, because that is what we're comparing palladium, platinum, and uranium to, because it's a world reserve currency, the US dollar is devaluing and it's going down pretty aggressively. It's losing value substantially. So without even seeing an increase in demand in these other precious metals, you could see the price appreciate. So in terms of the fundamentals for metals, obviously we're in a state of currency proliferation globally, which is bullish for safe haven assets that have a fixed supply like gold and silver. But when you do get these bull runs in the metals market, you do have things that are, I would say, less of a safe haven status. Gold would be the ultimate safe haven status, and then silver is still up there. But then you see silver run, and then I do think that you'll see these other metals run as well, because there's a finite amount that you can actually extract from the ground. So things like you said, uranium, platinum, palladium. If you're looking at the platinum, palladium, I believe, is in gas, and then platinum is in diesel, and obviously gas-powered vehicles are getting more common, and diesel's kind of getting less common, especially with the Western world. Europe, I know, has a lot more diesel, but in terms of relative strength, definitely look up uranium versus platinum, platinum versus palladium, palladium versus uranium and platinum. All that stuff, relative strength is very important, but when we see gold make a really strong push to the upside and create an opportunity for speculators to look in the metals market, that's when we're wanting to look for a little bit more of a high beta opportunity like silver, like we can see in the gold and silver ratio bend to the downside, and that's why we were in silver instead of gold. So in terms of the metals, I do think that we are in a metals bull market, and I am looking for continuation patterns on silver and gold. I'm not looking at palladium and platinum and uranium too much. Just higher spreads, less liquidity overall, just costs more. But if the opportunity is there, I think it's a phenomenal opportunity to continue the trend by finding continuation patterns. So that's my thoughts on that. Do you know when power companies will be recognizing their renegotiating their uranium contract? I don't exactly know when they're gonna negotiate their uranium contracts, so I do not know that in depth about the uranium market in particular. But it's an interesting one. Let's actually look at the ticker symbol here, just for fun, because I'm actually curious with palladium, uranium, platinum, all those. So we could do platinum here, palladium, oops, forgot A, and then uranium. Let's do CDFs. No CDFs. Which equity should I do? Because these are all stocks. Let's just do that one. That's going to give you exposure to uranium. And then let's just do silver. And then let's go to the weekly. Yeah, they're definitely looking pretty bullish here. Yeah, so it makes sense that these other metals are going to be moving to the upside, where we see gold and silver really do well. Palladium really showing some strength here, whereas platinum is a little bit less. We see some nice basing here, where we see some higher lows, and then lower highs squeeze the price, like so. And then you're now getting a push to the upside, where you're getting a break of resistance as well as structure within the price action. So that would be the previous high. And if you're looking for a little bit more conservative approach, that would be the previous high. And it broke both. As well as platinum broke the key level of horizontal significance. Previous support turned to resistance, and now it's breaking above this zone. So overall, I do think that the metals market is in a bull run, and that's why we're looking at things like silver especially. But we've been saying how gold and silver are opportunities for investors to potentially find some awesome profits. So, don't really know much more to say to that. Hopefully, you guys are having some good exposure in at least gold or silver. Silver is a little bit more speculative, but historically, it has proven to appreciate at a greater rate compared to gold when there is a metal bull run or metals bull run like we saw in the late 70s. So just some information on that. Hopefully you guys are just not sitting all in US dollars, because it's probably not a safe bet in the long run, in my personal view. All right, so now we're going to start off the global macro update here. We're going to get our recorder. Also, if you have any questions, drop them in the comment section below, and we'll be able to answer any questions that you guys have for us. So I'll close this because I don't really want to be looking at it. I don't really need to be, because I already have my metals market right here, where I have gold, silver, as well as the gold and silver ratio, which is very important to me when trading in the metals market. And then crude oil is moving to the upside, although you got to understand the DXY in the US dollar is losing value. It's depreciating. It's not looking great for the dollar. So we can see if things are just horizontal, they are going to get a move up, just because of the thing that they're comparing to is basically really, really dropping extremely quickly. We can see how fast it's actually dropping with the DXY, which is a composition of different currencies compared to the US dollar, which allows you to see the strength or weakness of the dollar. So we can see that there's massive sell-offs in the US dollar, where this is an extremely risk-on indication where investors around the world are selling US dollars and buying risk-on assets like the NASDAQ, like the S&P, like Bitcoin. But also, it's a little bit contradicting, because gold and silver are normally risk-off in monetary uncertain times, where we are both in a, financially speaking, optimistic state, but monetary uncertainty is still prevalent, with the expansion in the balance sheet at an exponential rate that would definitely make investors worried about inflation and the potential for CPI numbers to increase substantially. So there's hope in the air, there is optimism, but I do think the people that are aware of monetary history understand that this level of easy credit money printing will have consequences in the future, and those consequences will most likely be the proliferation of the US dollar and the debasement of their currency, which is going to basically force investors to look elsewhere to hold their capital and try to hold as much of their value as they can. Well, if you are completely clueless as to the possibility of the US dollar inflating and devaluing, you're going to get absolutely wrecked because it'll be so late by the time that you're actually going to be noticing. It's going to be 20% a year, 30% a year in terms of the inflation, and that's you losing value every single year. So if you're not early to the game, you're going to be too late, in my opinion. Mark says, so if it is going down, does that mean it's best to buy then? I would say no. That would probably be a really poor way to invest or trade, in my personal belief. I would say, if anything, if you're going to break it down to as simple as that, you'll make more money buying things that are breaking out to all-time highs and shorting things that are breaking to all-time lows, because study after study after study show that trend trading is more profitable than always trying to find the reversals. Now, there are strategies and systems that, yes, you can find reversals. That is 100% a strategy that some people use trying to buy the dip. I understand that. But in terms of, I think, as a novice trader getting into it, you'll find the highest probability setups when you look for continuation patterns, in my personal belief. So I personally like to use triangles, wedges, channels, or what you call bases in order to find continuation patterns to follow the trend. I'm not too much of a reversal type of guy, but if you do see a really strong, well-respected bottom or top, and then a strong, clear, well-defined breakout going the other way of the previous momentum, obviously that's going to be a technical indicator or a red flag that things could be shifting. But overall, trend trading has proven to be a more dependable, higher probability situation to find yourself in. You can do your own research. There's so many studies out there that actually have this. So just for your information. So yeah, I really don't think that would be the best thing to do. But in terms of the US dollar going down, it means that global investors are not looking for safety. Like, if you're keeping your money in cash, you're worried about putting your money in things like equities that can go down. How fast can the US dollar drop? Not very fast compared to things like the NASDAQ, the S&P, Russell 2000, even gold, even silver, even Bitcoin, whatever the case may be, right? Cash is a fairly steady investment or position to hold while there is uncertainty in the market. So the fact that people are getting away from the US dollar, which is the world reserve currency, it is the currency that is the base and where a lot of transactions are kind of dealt with, because if you have one country that is in Africa, another country that is in South America, they're probably going to be transacting in the US dollar, not their native currencies. Probably not. So the fact that we're actually seeing a huge move to the downside indicates to me that global investors are seeking higher risk, more speculative trades and investments, which is a little bit surprising, but that's what the current market is telling me. S&P broke out to a new high, breaking the June high. Nasdaq's hitting all-time highs. Bitcoin just made a move to the upside. Currencies like Australian dollar, GBP, UK's currency is moving to the upside. You see things like the Japanese yen and US dollar, which are safe haven currencies, move to the downside. So the overall technical standpoint within the current market is definitely risk on. So it's not just up and down. It's creating a narrative and a story and a thesis to your trade and having a story backing it. I don't just open up a chart and say, this is a nice symmetrical triangle. There is a lot more homework, And I would say making sure that all the ducks are lined, making sure that not just the technicals, but also trying to understand the fundamentals sort of are in line with my trade, obviously, right now with the current discrepancy between reality and the financial markets is large and it's widening. So that fundamental analysis might not be so useful, but then even just looking at different asset classes and what is getting a bid and what is not is very useful to trying to understand global risk sentiment. So best to buy when it starts going up then. I would say you can't look at it that simply. People spend billions of dollars a year trying to make more money in the financial markets. I'm not billions of dollars a year trying to make more money in the financial markets, right? So if you're looking at it in that perspective, where it's not just something that, like I guess you could look at it in a hobby, but this is a very serious game, and it takes a lot of work, effort, due diligence, homework in order to consistently profit on a monthly basis from the markets. So I would say it takes a lot more than if it looks like it's going up, it's going to continue going up. You got to look at more of the fundamental global macro, different asset classes, and understand the, in my opinion, risk tolerance of the global kind of pool of capital to really understand how to trade in the global macro space. I personally trade global macro. I trade FX, metals, and crypto, which I would classify definitely as global macro assets. Don't really dive into single stock equities, but I do dive into indexes, which is part of the global macro landscape as well. But yeah, I can't really say that if it starts to go up, it's a good buy mark because there's a lot more to it than just, opening up a 1 hour chart or a 5 minute chart. And just because you see like big green candles doesn't necessarily mean it's a great buy. It could just be a strong pullback and continuation down move that you didn't see on a larger time frame. You could be longing into an extremely heavy level of resistance. There could be so many factors that plays into it. So that is my answer for you. I can't really give you an easy answer of if you see ABC, you should always buy because it's not as easy as that. All right, so we're going to start our global macro update here. We haven't really recorded yet, but I do enjoy the discussion, that is for sure. So let's get the S&P 500 open like always. And then let's start our global macro update. So like always, if you do have any questions, definitely drop them in the comments. We will be going over questions throughout the video. So if we're talking about something that you may not be sure about, or if we're discussing something that you'd like more information on, and I have the information on private, provide it. For example, I don't have much information in terms of fundamentals of single companies. I don't really follow that. I don't follow their earnings or anything like that. I mainly follow indexes for not just the United States, but for global markets. So in that department, I do have more knowledge, but in terms of single stocks or equities, as a company, as fundamentals, I do not have that much information on that. So we'll start it off just letting you know, because a lot of people do ask, like, what's your opinion on the fundamentals of Tesla? Like, I don't really follow that, so I don't really have much information that I can provide you that someone who has more information on that would be able to give you. All right, so gonna get the recorder and get this video started. S&P, huge move, definitely a big risk on day. So we'll be looking at a lot of trades for risk on. All right. So, hopefully, okay, I'll answer this before. What is the best to start off with? If I had some spare cash, I'm starting out. From Mark. Totally depends on if you are investing, trading, what are your investing or trading goals? How active do you want to be or how passive do you want to be? So it depends on a lot. How much time do you want to sink into learning about this? If you love your full-time job, or if you love doing something else and this is just a hobby that you think could grow into more of a helpful tool in your financial life and wealth building, I think you may want to sink more time into it, but I think starting off, if you have zero understanding of financial markets, the ability to dollar cost average into an index or into something that you think is going to appreciate over the next 20, 30 years is, I think, a very positive thing to be looking at if you are looking at it more passively. For example, dollar cost averaging is, let's say, spending $100 a week or bi-weekly to purchase X many shares of the S&P 500 or some derivative of that, or some equity that you think will appreciate over the next 10 years. So dollar cost averaging, I think, is a really good way to get yourself started in the markets, whatever you're investing in. And if you really want to get diving deep into what financial markets can provide, then you would start looking at potentially swing trading. Day trading is where you open and close positions in a single day, whereas swing trading is opening a position and then waiting overnight, or a week or 2 weeks, kind of in that ballpark. You could even wait 2 days, 3 days, but anything over a day, under, let's say, like I would say 3 weeks, a month, would still be a swing trade, and then anything over like 2 months, 3 months is more of an investment in my view. But I can't give you any information on exactly what asset to invest in. I'm not a financial advisor, but all I can tell you is what I'm personally looking at. I'm personally looking at cryptocurrencies like Bitcoin, Ethereum, as well as a couple relatively strong cryptocurrencies compared to the rest of the altcoin market basket that I'm looking at. So Bitcoin and Ethereum are going to be the main projects that I'm going to be funneling capital into. And then the more speculative but solid opportunities due to the relative strength and fundamentals and project would be, in my opinion, Binance Coin would be a really good opportunity in the next handful of years, as well as Link, which is Chainlink, and then BNB's the ticker for Binance Coin, and then Link is the ticker symbol for Binance Coin, or for Chainlink, and those are good opportunities for alts. That's what I'm mainly looking at. You could also do I trade as well, but those are like my longer term plays. And then for metals, gold and silver, I can't stress this enough. Gold and silver is going to be looking really solid for, in my opinion, 5-10 years because of the easy money credit expansion for the last over 10 years since the great financial crisis in the United States in 2009, 2010. We've had basically zero interest rates. We were able to move them up a little bit, but since obviously this virus, we're now back at the lows of basically 0% to 25 basis points, which is 0.0 or 0.25%. So basically, it's almost free to get money. How hard is it for a business to survive if it's almost no cost to borrow money, right? A lot of companies are going to survive, and those are called zombie companies, and they're not great for an economy because they can't even pay off the principal. They're just able to pay off the interest, probably with the borrowed money. So those companies are not great. They just suck capital, and I think it's going to get worse. But yeah, in short, I don't exactly know what to tell you. I can't give you any financial advice directly, but I'm looking at crypto, metals, and I just trade currencies for basically revenue, making money so I can live and save and buy things I like. But in terms of longer term, crypto and metals are the main asset classes that I'm sticking to. That's just my personal opinion. I'm not really sticking to equities. In my personal view, this current environment that we're in terms of the monetary policy and the monetary environment, is very similar to what we had in the late 40s after World War II, 50s, not really in getting into the 60s yet, because the 60s is when we had the start of inflation, and then the 70s and late 70s especially is when we had extreme inflation, where the cost of goods and services exploded, double-digit increases. So if you were to buy an apple on June for $1, it might be, $1.20, $1.15 in July, and then it might be $1.25 in August. So it's going up, 15, 20, 10% on a monthly basis. That is pretty crazy, right? So in my personal view, I think we're inevitably going to hit that point like we hit in the late 70s. But the big thing to note is during the 50s and 60s, the lowest we got for the federal funds rate, the interest rate, is 2%. right? That's the lowest we got, right? So we had some wiggle room. Whereas if we look back after the great financial crisis, where interest rates or the federal funds rate was at basically 0% for 8 years, and then now we have nowhere to go. The only thing the government can do or the central banks can do is print more money, right? So we're in a place where central banks have very little power to do anything else other than proliferate the currency. And that is exactly what they're doing. And that's why I'm so bullish on gold and silver, is we are entering a phase where, like the 70s, we've printed so much money and created so much easy credit that if there's going to be a slight increase in the velocity of the currency, if there is more hope, optimism in the air, there is going to be an increase in the consumer price index, the CPI numbers, inflation is going to rise, people are going to buy that thing that they were going to buy later now because they know that the currency that they're holding is devaluing, which will further accelerate the velocity, and it's going to be a vicious cycle. And then basically there's going to be having to be a politician that is hawkish because there is an excessive amount of inflation. People will start to revolt, complain, take action, because if you see the savings of, let's say, like, I don't know, $500,000 in savings that you have over 30, 40 years of working, and you see that disappear, so the value is cut in half or even more, you're going to get extremely upset. Policymakers have to do something. The only thing that they can do to try to lower inflation and stop the economy from overheating is to increase the interest rates, right? So when that happens, it's going to be harder for business to obtain credit or easy money, which is going to make it more difficult for these companies to survive. They might go bankrupt or default, and then the services that they use might go bankrupt, and it's a chain reaction, right? So basically, we're going to go either into a huge inflation. Central banks can't do anything and won't do anything because they're afraid the stock markets and the economy will absolutely collapse, or they do increase interest rates and federal funds rates, and a lot of companies will go bankrupt, and we'll have something like, for example, the Great Depression or the Japanese asset bubble collapse in 1989, something along the lines of that. Those are the two options that we're going down with how low these interest rates are and how long that they've been at these levels. That's the only direction, and either way, I think gold and silver and crypto are going to do really well. But it's a big question of, are we going to inflate until, something happens, something cracks in the system, and they might have to change, like they saw in 1971, I believe, when they got off the gold standard. We might have something where, like the government introduces like FedCoin or something, and every dollar gets turned into every dollar gets turned into $10. I don't exactly know how it's going to work out, but they might change the entire monetary system if they just say, fuck it, I don't want to destroy the stock market because that is the pinnacle of our economy, or what the Fed looks like, what it seems like, and there's a lot of pensions funds that are relying on it and stuff, so we're going to inflate the currency, doesn't matter, I just don't want the stock market to fall. That's one option, right? But another option is massive deflation, like we saw in Japan after 89, where stock markets have never reached their peak. Since 1989, if you invested any capital in Japan, you would still be down. Same as real estate in Japan. If you bought real estate near the Emperor's Palace in Tokyo in Japan, you would still be in the red after 30 years, right? So real estate doesn't always have to continuously going up. It's because of this really easy money, cheap credit system that the United States has created since the 2000s, really the 80s, when they've just been lowering interest rates lower and lower, making lower highs and lower lows, and it's just been easier for people to borrow money. And what do people borrow money for? Well, real estate, mortgages is a huge part of, a person's life, in my personal belief, especially with kind of like the modern civilized family structure that a lot of people think is the norm. You buy like a white picket fenced house, single family house, you have kids, and that lifestyle is what a lot of people aspire to create, which then means that they're going to take out a mortgage to buy a single family home or a home that allows them to raise a family and stuff. Mark also said, if the price drops, does that not make it cheaper to buy shares? Well, Mark, it definitely does, but if the shares keep dropping, you're losing money, right? Yeah, I don't really know what more to say that. If the shares drop, it would be easier to purchase them because it requires less currency to buy the shares. But if it drops substantially, it's probably because of something that it drops substantially. Don't really know much more to give you on that one. All right, so enough of that. We're now going to go to the global macro update. We've been talking about a little bit for 30 minutes here, which isn't bad. Just looking at some of the global market indexes here. Okay, let's start this. Hey traders, welcome to another global macro update. Hopefully you're having a good week so far. I definitely am. We're going to start off this video by quickly looking at some of the economic data that came out this week and is going to be coming out for the rest of the week here. So core retail sales for Canada was below the forecast of 12%, but the previous was negative 20.7, which was actually better than the forecast, it seems. So it is actually improving to some degree, but we do see that it's not as aggressive of a jump back where we're seeing increasing percentages for the retail sales. CPI numbers for Canada, that'd be interesting because we are really looking at inflation and especially CPI numbers because this is going to be a really good indicator of the increase in the cost of goods and services within an economy. So that will be something to look out for in Canada. And then we see some interesting stuff coming in the Friday. So we got some PMI numbers for GBP. And then we got some new home sales for America. So not a whole lot. I'm really looking mainly just for CPI numbers and GDP, consumer confidence, trying to understand the sentiment for the consumers, especially because the United States has been, the consumer has been a backbone of the United States. They have been extremely resilient and they still have been. So this is going to be something that we're going to keep a really close eye on, as well as the CPI, like we said. So nothing crazy. So far, the Canadian dollar has been pretty weak throughout the entire move to the upside, where things like the Australian dollar, New Zealand dollar has been a lot more aggressive in their bounce to find a bid, where the Canadian dollar has not really seen the same level of demand. So it'll be interesting to see what it has for the rest of the week. So let's go back to the daily on the S&P 500 and start off the discussion. So let's close this. Let's bring this over and let's take a picture and discuss what we talked about yesterday, because yesterday we were looking at this candle right here, talking about the bullishness of it, and we wanted to see the price close above this key horizontal level of resistance, and we exactly got that. Now this is a huge breakout, breaking this descending zone as well as this consolidation or this basing pattern. We broke it, making a higher high. We made a higher low, holding the previous resistance as a new level of support and confluence to the descending zone. Lots of buy pressure here, and then we saw the next impulse move break the key level of supply right around here, and we got a nice higher high. So we could be expecting a higher low, but the overall momentum is definitely to the upside because we broke this major high right here back in early-ish mid-June. This is that major resistance. We can see key level of support back in the start of 2020. So the fact that we're above this definitely suggests that buyers are really present in the market, looking to actively reinvest and just continue the upward momentum. Like I said, we could have a pullback, but the overall direction, trajectory is to the upside, and our key level of support is going to be 30 to 36. Somewhere around there is going to be the main level of support that if we do get a pullback, I would like to see the price hold. But it's very clear easy to see on the chart because we have the June high, which was a pretty significant outlier from the absolute monster move up to the move down. And then we were holding that zone for a while, seeing higher lows, squeezing the price closer to the apex of the ascending triangle pattern, where you see a horizontal level of resistance and an ascending level of support connecting the higher lows, squeezing the price up. Buyers are putting pressure on the sellers each time, not letting the price make a lower low or even getting to the previous low that it had. So this is extremely bullish for buy pressure. We got a break, which was an impulsive move, and like always, markets move in impulse and corrective moves. This was an impulsive move. We're looking for the corrective move to validate the previous resistance as a new level of support and then continuing the momentum to the upside. You could be looking to connect the series of lower highs on the corrective move, giving you a potential descending triangle formation. But the overall direction and momentum and trend is still going to continue up, which is going to set up a potential risk on environment for the rest of this video. All right, so let's quickly go on to the other global markets. I do see a question from Dieselman. We will talk about FX when we get into the DXY section or the US dollar currency section, because that is talking about currencies, and we'll talk about your question in that area. So we'll get to it in about 5-10 minutes. We're just going to go through the US equities and then global equities, and then we're going to jump right into the currencies. So it's a pretty structured video, but we will get into it pretty soon. So stick with us here. Next thing, quickly discussing the Russell 2000, previous resistance, new level of support, making higher lows. We can see that right here. So overall, really bullish for the small caps as well. They have not been as bouncy, or they not have been as aggressive in terms of the buy pressure to push the price up after that huge March meltdown. But we do see buyers present in the area, creating an ascending triangle break, retest of the previous resistance to new level of support. And it does look like we are getting another move to the upside, very similar to what we had right here, where you see resistance multiple times, which then turned to a nice new level of support. And then we got a continuation. So we got a resistance into a support, and the continuation looks like we're going to test that June high. And what's interesting is the SPX is relatively stronger than the Russell 2000, because we can see the Russell 2000 has not hit the June high, where the NASDAQ, the S&P, and for example the DAX and the Japanese stock market index and Nikkei 225 has hit the June highs. Quick look at the NASDAQ. We do see that, actually I'm going to switch this to NQ because I'm just looking at the futures. So let's go back to the daily chart. And this doesn't provide any gaps. So that's kind of why I switched, is just the fact that I don't love to see gaps within the price action. I just think it looks a little bit messy. So we're just going to put our nice little trend line connecting the higher lows right here. Pretty well respected, I would say. And then we're going to be looking to add in a resistance as well. And I just like putting a projection to give us a little bit more room for the price to breathe. And then we got our nice little channel. We could draw a channel from here, 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 but this is going to be the larger daily channel that we do see. So we see previous support, not absolutely perfect. I'm just going to go from this wick high, and this is going to be red because it is a key level of resistance. So not an absolute perfect channel, to be completely honest, but it will do. Like that's going to be where I'm going to put that channel, right around there. And then we'll get a projection and then put the projection over top, and then we got our nice channel. And then we're going to use the smaller time frames to view the key levels of horizontal support and resistance. We see very strong levels of support right here. And we also see a midpoint where we see a previous level of resistance potentially turn into a new level of support right around here. So that's going to be the two zones that we currently see within the market. We did hit the previous high right there, so we're currently double topping, which isn't absolutely ideal, but if it does hold this previous resistance as a new level of support, it could just continue the trend towards the upside. So let's get our brush. So it'd be nice to see kind of like this, because then you could draw in a nice ascending trend line connecting this low, this low, this low, and potentially this low. So then you get a nice upward movement, something like that. But right now, the Nasdaq is just hovering at the highs here. It's looking pretty good, but the S&P recently broke its key level of resistance, so that's going to be the main reason that I'm more definitely in a risk on sentiment. I think what I might do is actually bring this down a little bit because it's not connecting the lower kind of highs right there. So I think that's going to be my zone. Unfortunately, it's not ideal. It's not absolutely perfect, but sometimes that's how it goes. Let's just move this over a little bit. I think this might be the high, just the wick high right there. So it's a bit expanding, which isn't absolutely terrific. Okay, I'm going to leave it like that. All right, now we're going to go on to quick discussion on the VIX. Not a whole lot to talk about. We're just seeing a decrease in volatility, except for recently where we're seeing a little bit of a slight fall within the S&P. But overall, we're seeing a fade in the VIX, which is exactly what we're looking for. That is the ideal situation for risk on, and that's what we're getting. So awesome on that note. Quick discussion on the global markets. ASX doing really well. Probably because they're really heavy in the mining sector and metals are really doing extremely well. Gold and silver appreciating at an exponential rate. And then we also do see the less common metals such as copper doing well, palladium, platinum, uranium, all seeing some appreciation. So it makes sense that Australia, that does a lot of mining, would see an increase. And then we see the Nikkei 225, which is a Japanese stock market index, not really doing a whole lot, just consolidating. UK not doing a whole lot either, but the DAX is making a move to the upside, breaking the previous June high. So the DAX is the strongest out of all these different indexes by far, but when you're looking at indexes globally, the Nasdaq is going to be taking the lead for the best index to invest in terms of relative strength. All right, now we're getting into the currency. So I will answer your question now. Diesel, hopefully you are still present. What is your opinion on the best Forex trading platform for a beginner? Platform. So you're thinking of a broker. It depends on where you live. I would say CMC Markets is a good one. Interactive Brokers is also a really good one to use. So those would be your two bets. Our two best bets, in my opinion. Interactive Brokers is really cheap for cost, and they have really good or low slippage, which is really good. So that could be an option for you. I really like their structure for their Trader Workstation, which is their platform on the desktop to actually trade. I love their system. You can set orders so easily. You can set OCO. You can set whatever orders you want. You can set stop entries with with targets, with stop losses, with trailing stops. You can kind of do anything. So I would say a really good platform would be Interactive Brokers because they are relatively cheap in terms of commission. They have very low spread, and I absolutely love the amount of options I have for order entry. So yeah, I would say would be the best bet for you. CMC is also an option. I don't know if they allow US residents or US citizens to use their platform, but I'm sure Interactive Brokers does, so you can use Interactive Brokers. All right, so we're now going to get into the currency side of this global macro update. So we were talking about the dollar absolutely collapsing, and we see this right here. We were holding a nice descending channel, forming lower lows and lower highs, very structured. And then what did we get now? We saw the break of this previous low back in June, and this is exactly in correlation, or in confluence, I should say, instead of correlation, in confluence with the S&P breaking to a new high as well. So there's capital flowing out of cash or US dollar and into indexes like the S&P, and we can see that directly on our chart. If we take the correlations of the S&P and the US dollar, they're going to be very negatively correlated. And we can see that right here. So we just got an absolute capitulation where we're seeing a meltdown from the descending channel. So we do get a little bit of a retest of this previous support into a new level of resistance. I'm expecting further downside for the US dollar, which means that we're looking for further risk on exposure in the financial markets, which means that we could be looking at longing equities, crypto. I think gold and silver will be doing real well as well to continue the momentum because we're seeing weakening and the depletion of the value held in US dollars. My personal opinion. All right, so that's going to be the US dollar. Quick look at the currencies just to discuss what we're seeing. We're seeing a huge move in stuff like the Australian dollar, and Canadian dollar is actually doing pretty well as well, but let's just zoom back a little bit. Yeah, Canadian dollar is definitely looking a little bit better, but the currency that takes the lead, in my view, is going to be the Australian dollar, definitely. And in terms of shorter time frames, GBP is looking decent as well, but the Australian dollar is really showing relative strength against the other risk-on currencies, whereas you want to be pairing the risk-on currency with a weak risk-off, like the US dollar, like the Japanese yen. So all these are... I definitely did this wrong. So we got the USD, odd. So actually this is not right, so I'll change that a little bit later, because this wouldn't be a comparison with all of them. That was my bad. But I have another one that is, and we see that Canadian dollar is doing well, Australian dollar is doing really well, and then the US dollar and the Japanese yen is poorly. So odd USD, GBP USD, odd JPY, those type of pairs I think would be good for long opportunities in my personal belief. Dieselman, what is causing the USD drop? Okay, so that's a good question. Let's discuss this a little bit further. Let's go back to here. So, let's understand what the US dollar is used for, right? What does the US dollar provide for ROI? Extremely little, if nothing, right? Bills, treasury bills and bonds provide some level of a yield. But if you're just holding cash, you're losing value every year because of inflation, because of the increase in the monetary base. So why would people pick cash over equities? Well, they're fearful that the stock market is going to go down, they're uncertain of what the future is going to look like, and they're anxious about losing capital. So what did we see back in March? This was when the stock market absolutely collapsed. The US dollar boomed. It went up exponentially. Look how fast it went up, right? Why was this? Fear, uncertainty, worry, right? That makes sense. What do we see right now? Well, the stock market is booming. The NASDAQ is hitting all-time highs often. Currencies that are risk-on, that are speculative, are doing very, very well, right? Volatility in the financial markets, like the S&P, is decreasing. Overall indexes globally are breaking resistances, holding supports, carrying its momentum in the uptrend. There's optimism, hope in the air. If you're a global investor, in this environment, are you looking to be conservative or are you to the upside? You're seeing validation that there's demand coming in, buying the dips, holding supports, breaking resistances. These are the type of things that global investors are looking for when trying to invest, right? You want to be carrying the trend. So the overall trend is risk on. People in the global macro investment pool are looking to take on risk. Where do you take on risk? You don't take on risk in cash. You take on risk in equities and other instruments and assets that provide a higher ROI. So people are selling the US dollar, which they need to buy that asset that will potentially appreciate at a greater rate than the US dollar. That is why the United States dollar is dropping right now, because it's a risk-on environment. People are looking for speculative investments and trade opportunities that provide them a greater yield than bonds or bills or just holding cash. If there is another worry, if there's a second wave, if there's lockdown, if there is a stock market correction crash, if there is worry, fear, uncertainty in the financial markets, there's going to be more bids, there's going to be more demand in the US dollar. Because more people are going to be looking for safety, security, and an ease of anxiety. And when there is more of that emotion in the markets, people will flee to the US dollar. This move was when the fear and greed index was at like 5 to 1. When there's extreme fear, people move to currencies. Look at the Japanese yen compared to Australian dollar, New Zealand dollar, GBP Canadian during around, mid-early March. Very similar situation. The Japanese yen got a huge bid compared to a lot of these other currencies. So hopefully that answers your question as to why the US dollar is dropping. And also, not even, that's just one side of it, right? The other side is the currency proliferation. Central banks are printing lots of money. If you increase the supply by a substantial amount and the demand stays completely the same, you're going to get a decrease in the value. Now, if you increase the supply and the demand decreases, that's going to give you even more of a discrepancy, which is going to even further and even more aggressively push the value of the US dollar down. So I do not think that the US dollar is in a good position right now. And I don't expect it to hyperinflate or inflate extremely quickly. Things in economies take a long time, but I think there's more people that are aware that the United States dollar is literally a piece of paper that you give confidence to, that everyone else in this world give confidence to, but it has no true intrinsic value. People are coming to realize this. And I think people are going to be looking at safe haven fixed assets or fixed supply assets like gold, like silver, and cryptocurrencies, which is a little bit more difficult to get into if you are not tech savvy, but I do think that it will provide a even greater opportunity for people who are aware and able to get into the space, in my personal belief. So that's going to be my discussion on the US dollar. Lots of money printing. Just quick discussion of how much money they're actually printing. Look at this money supply around the world, right? If you're looking at the United States in the last 12 months, we see that we've printed just under 25% more money. The total money supply has increased almost 25% in the last 12 months. Just in the last 3 months, it's at 13%, a little over 13%. It's unsustainable, right? If you're looking at Argentina, if you're looking at Turkey, which is seeing a lot of inflation, they're at 39, right? But change in 3 months, it's at 12. We're seeing higher inflation in the USA in terms of increase in money supply than places like Turkey. And their interest rates are already at 8% or something crazy. So the states are in a very difficult position. All right, so we're going to talk a little bit more about metals because we did a little bit, but that was a little bit of a discussion on the currencies that we're really mainly looking at. And I'll restart this a little bit later. So I'm just going to keep that right there for now. And then we're going to be looking at some metals because metals have been on an absolute rocket ship. So silver, I did sell at my take profit. I basically took the rest of my profit, and I'm just going to see if it's able to give me some sort of continuation pattern. I didn't want to avoid trading my plan, and I just traded my plan. That's what it is. Could have made a little bit more on here because I was taking profit at this high right here, if you're looking back. At this high right here, 19.6. That was the high that I took a lot of my profit on. And it's gotten a lot higher from there. But hey, made 4.4-ish% risk reward, which is pretty damn good. And now I'm just looking for the next continuation pattern for XAG on the 15-minute chart. We do see some consolidation. We do see, like, for example, this ascending wedge that melted to the upside, sort of like this. And then we also see a potential high base pattern, which is right here, rectangle. So you see a basing where you see a short-term equilibrium between the buyers and sellers, where you see a hesitation from the buyers breaking the resistance, but you don't see the comeback from the sellers pushing the price below a support. This is a nice equilibrium between the buyers and sellers, and if we do see a nice break and retest, could be a pretty good continuation pattern to follow the trend. Sort of like that. That would be the opportunity that you'd be looking for a basing pattern. But it's looking pretty good. We'll see where it goes. We'll need to get some more price action before we really look to trade this. But it's looking like a decent opportunity. But what I would really like to see is something along the lines of this. Some formation like a symmetrical triangle, or we'd be looking at like a descending triangle or a descending wedge, something like that. That would be my ideal outlook for silver, because we saw it back, if we're going to the 4-hour chart, this was a major triangle and this was a wedge. So I really would like to see another smaller, shorter term like this. So if this is the big move, I want to see something that is smaller, more condensed, kind of like that. That would be ideal, right? And then you're looking for continuation patterns like that, and then you're just looking for another entry. And I think that continuation pattern will continue the overall trend. So that's going to be my view on silver. I've basically exited my trade, and I'll just see if this will give us another opportunity, because theoretically trailing stop losses would have been good, but that was not in my trade plan. My trade plan was to take my profit at a predetermined level with an awesome risk reward, and I did. So now I'm just waiting to see what silver does. Gold, we did say it was looking like a really good opportunity there. Hit the target of 1842, and we'll see where it goes from there. If we're looking at the daily, major move right to our key level here, where we can see it was a significant level back in August 2011, a long time ago, as well as the overall structure of this wedge gave us, where it was this wedge turned into high base, and then just take the size of the high base, kind of like that, and that's your next target at 1842. So we do see that hit right now. And I kind of want to see a bit of a consolidation here. If it continues to go up, I might miss a little bit of a move, but you know, I'm making pretty damn good fucking money on silver and gold here, and I don't really, oh wow. Getting into the smaller time frames, that looks really tasty. Wow. Got a nice key level of resistance, some higher lows. That is looking like a great continuation pattern in my personal opinion. And with the US dollar absolutely collapsing, I think global investors are looking to further get exposure in gold. So that's looking pretty decent with high RVOL, which is great to see. A lot of traders looking at this asset. So that'd be something to be interested in for sure. I'll just keep this here, but it'd be nice to see a little bit of a pullback, but I will be keeping a pretty close eye on gold. Also, we'll quickly look at the gold and silver ratio. It's just absolutely plummeting, which is absolutely awesome for silver. So I think we're going to have some level of hesitation, because if we're looking at the weekly, we do see this is a key level of support as well. So we were able to hold this previous support zone, absolutely plummet, and then now hit our next support zone. I think the next major zone that we need to pass is going to be this current level right around here at around 87. But if we're able to pass this zone, we have a lot of range to be working here. Don't know if we're going to go all the way to 30 or anything, but in terms of this wedge, actually what we can do, just to see where it potentially could go to, is get the arrow, find the breakout zone. So yeah, 50, somewhere around there, we can see key level of support somewhere around here. So we'll go like that. So we'll just put it at 50. That's going to be the possible target. So look how far of a move this has to go. So if you think that you're too late on silver, I would say you're not too late on silver, but I think that a possible move to the downside in the gold and silver ratio is a probability, and we are going to be looking for further continuation in the gold and silver ratio to the downside, which means that we're going to be biased towards longing silver compared to gold, although we do think that both silver and gold are going to be continuing the upside move. So that's going to be gold and silver. Not a whole lot more to discuss. Like I said, I am looking for a little bit of a pause, a consolidation in silver. In gold, it looks pretty decent, but in silver, I'd like to see some level of a correction, consolidation, and a continuation pattern to the upside. Now looking at crypto, going to get a little bit of water, but diving into the realm of crypto, because there was some bullishness In Bitcoin, we didn't see some extreme level, but we are going to be looking at that still today. Just quickly looking at these FX markets here. Lots of movement. Like we said, Australian dollar, Australian USD, or AJ or AU, really good opportunities for a long, in my opinion. New Zealand US dollar, so definitely just risk on trades only at this point in time. So quick look at the BTC price now. We broke this descending zone, but I'm really wanting to see the price break market structure. So what do I mean by this? When we see a significant high form right here, that would be a market structure. And then we're making lower highs right here, right here. So we're decreasing the highs, making lower highs, obviously. And then we are increasing the lows. We see these lows that are getting respected, right? So we see type B, type B, type A, and then we see a type A and a type B right there. So we know that this tight range is contracting in volatility. The price action is getting smaller and the moves are getting shorter in terms of the distance between the resistance and support. At a certain point, there's going to be an expansion in volatility. I do not think that expansion in volatility has occurred yet. We are still contracting in the volatility. I'm going to use my horizontal zones more than my descending and ascending zones within this current structure, just because there's going to be noise within this very tight range that we're working with. So we haven't seen the recent high get broken. We can even take it a step further and get a little bit more aggressive and move down here at around 93.75, and we still do not see the high getting broken. So the contraction is still taking place within the price action of BTC in my personal view, and I can further validate this with another chart. So let's go to this chart, which is going to be the Bitcoin Historical Volatility Index, and we see it further move to the downside below what we saw back in March of 2019 before the price went from 4.2K to 14K. And then the last time we had this low volatility, which was even greater in terms of the reduction in volatility, was October of 2018, where we saw the price move from around 6.5, 6.2, all the way to 3.2K. So we're seeing a massive depletion in or decrease in volatility. So I do think there's going to be a really significant large move coming to Bitcoin, as well as the altcoin market, because Bitcoin is going to be the leader, the king, the initiator for a lot of these big major market moves in the altcoin market, in my personal view. So when we do go back and look at the two potential options that we have within this price action, looking at the Bitfinex chart, let's look at the two scenarios that we can see. The first scenario, if we are going to continue the risk on sentiment that is indicated by the equity markets as well as the currency markets, this is going to be the first option. Oh, let's go here and zoom back. Right? I don't know if it's going to go all the way up this way, but the overall structure, I think, is going to look like this, where we first see a massive expansion in volatility, where a lot of these bears, a lot of these shorts are going to get caught off guard. We know that there's a decrease in velocity. The last time we saw that was right here, as well as right here. Let's take this off and draw that again. These were the two previous times we've had massively low volatility. First time right here, move to the downside. Second time, move to the upside. This is the third time we're getting the volatility to be extremely low. So in my personal view, what we're going to be looking for is, first option is going to be this way. You're going to get a massive impulse, like we saw, a massive impulse consolidation. This is your continuation setup, and then you're going to get a further continuation of the move. So what we're looking for is continuation patterns somewhere around here. And then we're looking for a continuation move to the upside, and that is where we're going to really start making some solid profits. That's going to be the first option. And then if we're looking at this large macro triangle on the daily chart for BTC, I'm just getting this opening of the symmetric triangle and raising it to where we see the breakout, which is right around here. So we're going to go right around there. We do see that the potential take profit is going to be around $31,000 for one Bitcoin, which from around, let's say, 11K is obviously a massive move to the upside. So that's going to be option number one. And a lot of things would have to change in this circumstance, but one thing that shouldn't change is the overall risk sentiment or the correlation between BTC and other traditional assets is going to change quickly, because right now Bitcoin is positively correlated with the S&P 500 and negatively correlated slightly with gold. So it's considered, from the global macro standpoint, as well as just looking at the mathematical formula for correlation, Bitcoin is considered a risk on asset and has similar attributes in terms of the kind of, I would say, instrument that it's used for as a speculative instrument compared to a safe haven like gold and US dollar right now. So if the S&P moves up, I expect this. If the S&P moves down, this is another story. And we do have that as well for an option. So let's just delete that and then look at, take away this. So this is going to be, in my opinion, the second option of the two, where if we see a drop in the S&P 500 where risk on assets are moving to the downside, I think we could see something like this, where you see a massive drop and then you're looking for continuation patterns, and then you're going to see another move to the downside. And we do see, if you are looking at this large triangle, we do see this ascending level of support connect the higher lows. So that's going to be option number two. I would say within this zone, it's just a lot of noise, and I would rather see validation of the momentum and the expansion and volatility before I jump into the markets. One thing that you could also do if you are expecting a pretty aggressive move would be to set stop entry orders. Maybe one above the high, maybe one above the low, whichever one it triggers. You close the other one, or you could do one cancels, other orders, whatever the case may be. There's a lot of ways to use orders to your advantage, but these are the two different scenarios that I see for BTC. And I have been leaning a little bit more on the sell side throughout the consolidation, but if we do zoom into the smaller time frames, it's looking a little bit more bullish. If we break 94.50, that to me is definitely going to be a situation where we want to be looking for opportunities to the upside. And then we do see that there is heavy resistance around the 10K range, but the fact that we are breaking a key level of resistance suggests that we could be continuing the further upside momentum. And we also see confluence with traditional markets like the S&P, the NASDAQ, Russell 2000, all risk on instruments continue its momentum to the upside as well, validating that buyers for risk on instruments are in the market. So that's going to be the two different options that we have. Let's just take those away, but we'll see where it goes. Like I said, key level is going to be 94.45 for a breakout to the upside, and then the key level to the downside is 9K. So that's going to be my BTC analysis. Let's look at a little bit more on the crypto side of things. Not a whole lot on the total market cap of the altcoins. Oops, did not want to do that. Let's stick that to the daily. I want to change this one to, let's say, the 12-hour. We do see a little bit more of a consolidation moving upwards, which is great to see. So let's just go to the weekly and quickly just draw this out, because I did accidentally close my entire BTC analysis. So those are the two key levels where you got resistance and support. It's nearing a resistance zone, and we can draw in a trend line as well, but I'll just leave that there. And then when we are going on to the smaller time frames, we do see previous resistance, new support, zooming out, extending that. And we also see the same thing happen right here. So very structured range that we are stepping up into, which is good to see. And then we're just seeing a possibility of a break and a formation of a previous resistance turned into a new level of support like we've seen in the past many times within this zone. So we're just seeing a high base right now. If it moves to the upside, that would indicate that the altcoin market is seeing higher appreciation and they are looking like it's going to further the move towards this previous resistance right here at around 110 billion in terms of market cap. So looking more favorable for the alts. And then this is the next zone that we're looking at. We do see this descending zone right here. Let's get that red. And then we also see a horizontal zone right around here. Let's just move that a little bit further. And then I also see this descending zone right here as well, which isn't perfect, but just like so. So that could be an option for a series of lower lows that's still holding. And then I will close this. And then I will put a projection there, and then we'll be good for the BTC dominance, which has not really moved much, but in my opinion, it's really good to understand where BTC dominance is because it's going to be a pretty important aspect to be considering when you are looking at the crypto market, especially if you're focused on trading alts. You really want to be mindful of the BTC dominance chart, which is not really doing a whole lot right now. If we're looking at the 6 hour, we do see really just a consolidation right at a major level of demand. So we'll see where that goes. It's not really doing a whole lot right now. And then quickly looking at some of the more relatively strong altcoins here. Not much has broken out. Let's just go back. I don't want to look at that too much. Not much has broken out. Stellar's ramping up to look like a potential opportunity. Cardano also looking really good for a possible symmetrical triangle continuation to the upside. I'd love to see another move on Cardano where we make some good profits because we made really good profits last time. VeChain is not on here, which I should get up. Let's open another one and just get VeChain on here because VeChain was a really good trade that we made last month as well as tried to go this month. And then let's do 4. So let's do VET. VET is looking less ideal, to be completely honest. Let's just put VET on here. Oops. VET USDT. And then we're just going to go into a double. And this can be something like XRP. Okay, so let's look at VeChain here. Let's do a little bit of technical analysis going from the daily and working our way deeper into the price action. So we know that there's a key level right around there. I don't love that massively white line. It's a little bit too aggressive for me. I'm going to make it nice and small and nice and dotted. Very easy to see, very light. And then we see some pullback, which is good to see, hitting a key level of resistance. Let's go to the 4 hour and draw in our descending zone right around here. And that can be red. Pretty well respected all around, I'd say. And it's a good descent, or it's not too aggressive. Like Stellar Lumens is pretty aggressive in the move to the downside. And then we also see, if this holds, a possible ascending zone right here. But it's a little bit messy there. If you go into the 2 hour, it might look a little bit better. Yeah, it does look a little bit better. It is respecting the zones, but it's just a little bit messy where it's not absolutely precise. But you might not get that every single time, and the structure could still be great. And I'm just going to put the projection there. Make it green. And then that's going to be the overall triangle that we're going to be working with. And then we also want to see a break in structure right here as well. So we're not just looking for the break in the price action structure, but also we are looking for the break in the formation of the market structure, which is either higher highs, higher lows, or lower lows, lower highs, or consolidation failing to make a higher high or lower low. And this is a contraction where we're forming lower highs and higher lows, squeezing the price, contracting it towards the apex of the price action, which is right around here. So That is VeChain. That is these cryptocurrencies that we see right here. And that is the completion of the global macro update. So we'll keep everyone updated in terms of the altcoins, but BTC is in a very pivotal place, that is for sure. All right, so that's going to be the end of this video. Hopefully you enjoyed it. If you have any questions, drop them in the comment below. If you found this useful, educational, entertaining, it'd be great if you would subscribe. And if you found it really enjoyable, it'd be great if you would like it and let other people know about this free global macro update that is provided on a daily basis on the weekdays, where we go over the overall market sentiment, understand risk on versus risk off, using multi-asset analysis, not just opening up the S&P, not just looking at Bitcoin and saying, I think it's going to go up, I think it's going to go down, but we're doing a lot of homework, a lot of due diligence, and trying to understand the overall financial markets through the perspective of risk on or risk off. Very binary, very simple, but there's always going to be difficulties in something in the financial markets because nothing is black and white. So that's going to be the end of the video. Hopefully you enjoyed it. Until next time, have a good one and safe trading.